Ladies and gentlemen, good day and welcome to Q1 FY24 earnings conference call of United Breweries, hosted by Investment Capital Services. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Harit Kapoor from Investment Capital Services. Thank you, and over to you, sir.
Thank you, Jacob. On behalf of Investec Capital Services, would like to welcome all participants and the senior management of United Breweries for the Q1 FY24 United Breweries post-results conference call. From the team at United Breweries, we have Mr. Radovan Sikos, Director and CFO, as well as Mr. Robin Ashton, Head of Business Control and Investor Relations of the call. I'll now hand all over to Radovan for his initial comments, which will open the queue for Q&A. So over to you, Rado.
Thank you. Good afternoon, everyone on the call, and thank you for joining us today. I'll give an update on Q1 2024. Let's start with the highlights. Volumes were down 12% in the quarter, affected by some route-to-market challenges we've done, supply chain challenges, and we also had some lower interstate sales. Excluding the route-to-market, our volumes were down around 4%, driven by Telangana and Haryana. In premium, we were down 20% in the quarter, whereas volumes were flat, excluding the route-to-market changes. We did see some good mid-teens growth for the Kingfisher Ultra Max brand for us, and some promising also growth for Heineken Silver, which we continue to focus on. Now, Silver is now contributing to around 3% of the total Heineken franchise. Net sales were down around 7%, driven by the volume decline and offset by healthy pricing coming through. The pricing we've taken across multiple states, which continue with our commitment to drive this by our revenue management initiatives. Gross margin during the quarter was lower compared to the prior year, which we've been discussing in our previous calls in terms of the inflationary pressure. Versus Q4 of 23, there has quite a bit of an improvement, and we are down around 196 basis points we're up 196 basis points versus last quarter. EBIT margins contracted slightly this prior year, and significant improvement versus the last quarter, which is nice to see as well. You can see we've added 2 additional slides in our presentation, one on the volume progress and the other on the margin trajectory. As you can see in the volume development slide, where we have broken it up into April, May, June. April, May was really a tough period for us. In April and May, particularly, we had quite a bit of challenges in supply chain in Karnataka in terms of getting dispatches out of breweries. But this has improved significantly in June. Our June volumes were up 44% in Karnataka, which is great to see. And we continue to see this, strong volume performance going through in July overall for our volumes. So that's good to see. In terms of the margin development slide, you can see we are observing a reversal of the previous downward margin trends. And as mentioned earlier, our gross margins improved 196 basis points versus previous quarter. And our EBIT margin also improved versus the previous quarter, which is good to see. So, the initiatives and some of the drives in savings in the supply chain are starting to come through as well. In terms of the outlook, we see a bit of softening of the cost of sales, but I mentioned as well in the press release there is a bit of volatility, right? So as you all know, there's quite a bit of pressure coming through also on rice into the back end of the quarter. But generally, we see a bit of a softening. So, we for sure see improvement in our gross profit margins or your net contribution margins going into the next quarters. So we should see that. We'll continue to focus on growing the category, and pushing the premium as well going forward, and we remain quite optimistic in terms of, going forward over the next quarters that there should be an improvement on our gross profit margin. So that is my short summary, and we can open up to the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead. Mr. Roy, your line is unmuted. Please go ahead with your question.
Yeah, thanks. I've got 3 questions. So first question is on slide 7. So I have seen that there's a good recovery in June versus April in terms of volumes. I wanted to understand in RTM, it could give more clarity in X of Karnataka. What are the issues? And Karnataka, is there any pipeline filling? The first 2 months there was obviously lower inventory. Karnataka, the good growth coming back in June. Is there some sort of one-off also there? So that was my question. But is impacting also your other, for example, when you saw a minus 20% volume and minus 30% volume in April and May, would your competitors in those specific states have seen such a sharp dip?
Okay, so let me start with Karnataka, and then we can go to the route to market. So in Karnataka, I think I can say that in April it was more our own challenges than competition that our volumes were down. Okay, so we were having some administrative issues to get our dispatches out in April, which caused quite a volume decline for us in the month of April, and it flowed into April also due to the elections that were taking place. And we were probably impacted more than our competition, and we could lose share within Karnataka in those months. Quite a bit because of those 2 reasons. In May, in the back end of May, it started improving a lot. And in June, like I said, we were up over 40%. And that was, yes, there was pipeline filling, primary, so for sure. But we also saw our market share go back up again quite a lot. And we see it continue good volumes in Karnataka for the month of July. So it's not just about pipeline filling, but it's really a good recovery in terms of our volumes going back to, trying to get back to the place where we were before. That's on Karnataka. On the route to market, what we mentioned specifically is the volume decline that we have had, particularly in quarter 1 in Tamil Nadu and Andhra Pradesh. And we have seen quite a bit of improvement, particularly in Tamil Nadu as of back end of May, in June, and we continue seeing good volumes in July for Tamil Nadu. The other one, of course, is Delhi, where we have lost quite a bit of volumes. That's generally also, we see some of our bigger competitors also have lost volumes there. And there we know that there have been some issues around Delhi market, which we continue to see going forward.
Sure. So, very quick follow-up here. You mentioned Karnataka, you have seen very good growth in volume. You also said large market share loss is also recouped. So my question was on the leftover market share loss. When do you see in Karnataka that coming back? And second is some of the other players, not beer, they have really curtailed or exited Tamil Nadu. Would you also have some kind of process on Tamil Nadu? Would you want to continue medium long term here, given the issues of government control, which is much higher than other states?
So, like I've mentioned in my previous call, we changed our route to markets in Tamil Nadu, and we are working on that route to market currently to continue in the current structure that we are in. So far, we've had volumes recover quite nicely during the season. Whether those volumes will remain is yet to be seen. But we are working through that as a business to see if it will be sustainable or not.
And on Karnataka?
Karnataka, for sure, we are recovering on our market share. We recovered significantly in May and into June. We recovered strongly in June for what the losses we had in May. And in July, we are also increasing share. We are still below where we would like to be in terms of market share. No, it will take a bit of time to get back to the levels we wanted. It takes some time. But we are not far off where we were in the past.
Thanks. My last question is on inflation in 190 quarter-on-quarter. Tell us on barley malt and glass, how is the situation in glass, and there is a correction in the prices, but so how do you see in Q2 and in terms of glass and barley malt?
So like I said, the barley pricing has been good. The new crops have come in at good prices, so we see softening coming through there, and we should see that coming through into quarter 2 and quarter 3 also into our cost of sales. On the glass, it's a bit less so, to be honest. To the end of the year, we sort of see not that much softening, or if any. But going into 2024, potentially there could be some, in terms of some of the main commodity prices related to glass production start coming down a bit, which there seems to be some signs of. The issue, of course, is that there is, limited capacity in the market for glass, so that seems to play against that in terms of demand and supply. So more soft. I see it more on the barley side than on the glass side in terms of softening.
Sure. Thanks. That's from my side. Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, please limit your questions to 2 per participant. The next question is from the line of Ritika Chopra from JP Morgan. Please go ahead.
Yeah, hi. Thank you for the opportunity. My first question was on supply momentum. So is it right to assume that due to market changes in states of Tamil Nadu, Andhra, to some extent Delhi, will start getting into stage from the current quarter? And does it imply that the volume growth trajectory will now start to normalize for you in mid to high single digit growth?
Chopra, your voice was a little bit unclear on some of the questions. Could you just say that again once more slowly, please, for me?
Sure. Is it better now?
Yes, a little bit better, yeah.
Okay. So my question was on volume growth momentum. Is it right to assume that route to market changes in more of the states that you're seeing will start getting into the base, from September quarter, which is the current quarter, the base will be a lot more nice, hence volume growth recovery should also move to normalized levels for you.
Yes, so some of it should do 100% in terms of volumes in Delhi. In some of they'll do more so at the end of quarter 3. So around November, December, we should see that we start cycling some of the impacts of route to market in 2022. That's correct. Yes, that's true.
Sure. And the second question that I had was on, you talked about price constraints in Telangana and perhaps even in Haryana. What are you doing to address these constraints?
Okay, so on Telangana, two things. What happened is we did not manage to get permission to Sunday shifts, or they were cancelled for a couple of months in Telangana. Because the Sunday shifts were cancelled, that gave us capacity constraints in Telangana. But, we are working through that going into 2024, that there will not be such a recurrence of this. So that we should get through that. The other thing that we have been doing, and I've mentioned it also in my summary, is lower interstate sales, right? So that means sales between different states. You need to get various permissions, but also you need to pay certain export fees to, transport between states. When we looked at the profitability of some of these interstate sales that we were doing, right, they were negative in net contribution for us. And we said that we made a call on that we will not continue some of these unless it's from a strategic angle, for example, premium. We would not do these interstate sales at loss-making, numbers, and therefore some of our volume decline has been, due to these type of things, and that also includes Telangana, where we didn't, push volumes into Telangana when we had some capacity constraints.
Thanks. Does it mean that do you need to do more CapEx, to ensure that you're not capacity constrained for Canada, or do you think tying up with, a contract you could help the cost?
So we look at our capacity investments across the different states, and Telangana is on one of them. I think it's more to drive more efficiencies within the breweries at this point with Telangana. We also look at potentially capacity based on the growth there. But if we can get some of these administrative issues like, having day shifts and these things sorted out, then we can cover some of these peaks.
All right. And Haryana also, is correct to assume there were similar issues, or there was something else that state?
So in Haryana, we also had some, administrative issues in terms of supply and in terms of getting licenses issued for production. And therefore we had some of the volume decline there as well. We also, have managed now to get permission to export into Delhi, particularly our premium brands like Ultra. So that will also help sales out of Haryana.
All right. So much, Radhavan.
Thank you. The next question is from the line of Jay Doshi from Kotak. Please go ahead.
Hi, for the opportunity. Could you provide us some update on the CEO appointment? How is the hiring process going on? When can we expect some updates?
Yes, so in terms of on the CEO question, so we are, much closer in terms of, the recruiting process, and, we will be able to give much more info to you sort of in the middle of September, end of September, through the appropriate channels, that we disclose this information. So I think, mid-September, end September, we will definitely have the communication around that.
Understood. Second is, when I look at your operating performance, other expenses per case has, line when I compare it with, earlier summer season, this pre-pandemic. Is this a structural reduction in cost structure in terms of will other expenses per case more or less remain in this range even when gross margins recover? Or we see a spike in costs as gross margins recover?
So there's a couple of things in there. Some of it is already coming through in terms of the efficiencies that we are driving. Some of it in the operating expenses that you see there is also because of lower freight. And that's a combination also of the things we are doing, like I've mentioned, on the interstate transportation. So these are, drives that should stay and help us with margin. And some of it then would be, there are some volume related, that there will be some more increases coming through in costs, as our volumes are now improving going into, the other quarters.
Right. And in terms of, your notes to accounts mentions that you aspire or your intent is to bring, restore volumes in the states that are affected by RTM. So I heard your comments on Tamil Nadu and Delhi. I mean, it's sort of anybody's guess. But what is your sort of, approach for Andhra Pradesh? Do you expect some recovery in volumes in that state, or that state will sort of, remain at current levels?
We are expecting some recovery of volumes there as well. Yes.
Okay. So between AP and Tamil Nadu, I think in the first quarter when volumes were impacted after Henniken's review and decision in model, if I remember correctly, the volume impact was high single digit or 9-10%. Right. So when you are able to normalize these volumes or restore these volumes, what would be salience in Tamil Nadu, your overall volumes expected to settle?
It's difficult to say, to be honest. Like I said, I'm quite cautious about Tamil Nadu long term at this point, in the medium term, if I can put it this way. At the moment, our volumes are looking nice in Tamil Nadu. In Andhra Pradesh, we're expecting to get to grow. I think Andhra Pradesh will not recover to the volumes of prior 2019 really, because total market has actually declined. Also with, the closure of some retail outlets, etc., that happened there. But definitely there will be an improvement there going forward. So, we remain cautious on Tamil Nadu. We are doing what we believe are the right things in Tamil Nadu. And let's see how it goes. I think we all need to just monitor it as we go along into the next coming months, and then we see. We're really trying to do what we can there, in the right way.
Thank you. A final question. The recent price increase in Karnataka, what does it mean in terms of increase in the retail price for consumers and increase in realization for you?
You mean tax duty increase, I assume, yes?
Correct. In Karnataka.
So in terms of, the price increase as such, it was around, on the shelf, I think, Robin, correct me if I'm wrong, but I think it's around 4-5%, right?
Yes, 5%.
3 to 5%, yes. So that is the impact for us. Spirits were impacted more, as you know. So we are quite bullish that it should help the category in the medium to longer term.
And do you manage to get any price increase? Your net sales realizations are improving, or the entire increase on shelf prices is, will be kept by the government?
So we've also done a price increase in Karnataka. So we are getting a better per case realized sales as well in Karnataka.
Possible to try the magnitude, whether it is low single digit, mid single digit, or whether that?
Robin?
The earlier price increase that we did, it was around May, then indeed increased our realization with around mid-single digits. Price increase that was taken in July, it only improved our realization to a very limited extent on SKUs. But more important to mention on Karnataka is that the relative pricing of beer now is better compared to spirits, as it was previously, compared to what it was previously.
Perfect. Thank you so much. Thanks. That's it from my side.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi sir, I just wanted to continue on that Karnataka. So the understanding and clarification that the understanding is that despite taking a price hike of about single digit, we still are at a consumer level relatively more attractive. Beer is more attractive, which should help growth from a volume perspective is the way I should kind of look at this. I understand correctly.
That's correct. So this should be more attractive for beer. The way the price increase has gone in terms of the excise. So that is good. Should be good for the category. So we're going to be monitoring that as we're going forward.
And from a market share trend perspective, and if I heard your comments, while the industry should normalize from third quarter, as a company, we should now go ahead and market, see market share gain. That trend is sustaining in July, and that's what we should expect going forward.
That is the aim, yes. We went through some difficult times in April, May, and this is going to happen, right? I mean, it will be volatile as we change certain things in our strategy and in our approach. There will be a bit of volatility up and down, but we have to say we may remain resilient on these type of things. Some of the calls that we make are profit calls, right? That's not to say that we are going to give up on our market share. Let me put that right. But we might lose some basis points in market share, and that's okay. That's fine. We're not going to sell at a loss in terms of case. We will make those calls where we see that if we are not making a profit, like I mentioned about the interstate, we will make that call, even if it causes us to lose a couple of basis points on market share. Karnataka is a key state for us, and we will ensure that we recover some of the market share declines we've had over the couple of months. Definitely, it's a big focus area for us.
Okay, and so the last bit was as we approach the election season, state elections are also due in December, general elections. Anything that you would be worried about or comment of normalization of volumes? Anything you would want to highlight? Because Rajasthan are coming into elections, etc. Do you see that's a concern, or the others are not that an issue as we speak?
At this point, we are monitoring that. There can always be some impacts on that. In certain days you cannot, for example, some of the outlets are closed, etc. Like we had in Karnataka, we had some disruptions. Particularly if you have a share in the state, that can, cause you temporarily some decline. Then, like I said, that is temporary, and then, if you've got your right basics in place, you should get through those. So in Rajasthan, might be some disruptions, but it's not something we are too concerned about at this point in time.
Got it. That's all from my side. Thank you very much. Hello, I'm done. Sorry. Thanks a lot.
Thank you. A reminder to all participants, to ask a question, you may press star and 1. The next question is from the line of Krishnan Sabramurthy from Nirmal Bang Institutional Equities. Go ahead.
Yeah, everyone. Maharashtra with the volume growth. Now this in a difficult market for poorer players. Anything that's changing on the ground?
On Maharashtra, yes?
Yes.
So the category per se has had some difficulty. I mean, we still have a strong market share there, which is good, and we see, we need to push more premiumization there. We see quite a lot of opportunity around, particularly around Mumbai and Pune and these type of areas. But there, I think it's important that there is a better playing field in terms of the excise regulation between spirits and beer. As you know, the excise on beer is significantly higher than on spirits, which you don't really see anywhere in the world. Okay, and that is something that we are working on in terms of, leveling or, making sure the beer category has its right space at the right and being taxed at the appropriate levels going forward.
Okay. My question is on the sales mix that you witnessed for this quarter. As Telangana, Tamil Nadu, Delhi back to a more normalized level, would you expect in positive that you saw in Q1?
A reduction of the positive mix as we saw in Q1, you're saying?
Yes.
There can be some impact. Then we also see Karnataka improving as well. So, yeah, it's difficult to estimate at this. As we've mentioned in the past, it does impact when some of these states grow like a Telangana. So, yeah, I wouldn't like to forecast that at this point in time.
Sure. Just one final question. Anything that you can guide in terms of CapEx for the current year or next, given constraints that you faced during the summer quarter?
Sorry, you mentioned, is there any constraint on CapEx?
Not fully get that. Any increase in CapEx that you have in mind when the constraints faced in this year?
Yes, so we are definitely looking at that in terms of our CapEx plans already now for going into 2024, because the lead times, can be quite a few months. So we will be reviewing of how much capacity we need to expand if needed, and also, our relationships with the contract brewers, that there is enough capacity in place there as well. Because we had also quite a bit of struggles in the northeast part of India in terms of capacity, and some breakdowns that some of our contract brewers had there, and we want to make sure that this doesn't happen going forward.
For now, in terms of CapEx for the year, you will be back later.
The CapEx for 2023, we communicated last time. We are not changing that amount like what we communicated last time.
Got it. Thanks. That's it from my side.
Thank you.
Thank you. The next question is from the line of Himanshu Shah from Dolat Capital. Please go ahead.
Hello. Hello.
Yes, Mr. Shah, you're audible. Please go ahead with your question.
Okay, thanks. Can you just let me know what would be the share of the RTM markets, EN, AP, Delhi in this quarter volumes, and last year same quarter, what would have their share, the overall volume?
What would have been our share in Tamil Nadu, Delhi and AP?
No, of the total volumes, what will be the contribution from EN, AP and Delhi?
In the volumes it's per se, yes? In total, or what do you mean exactly? Robin, do you understand the question?
Yes, so you want to see the salience basically of the RTM state.
That's right.
Well, that's lower than 10%, but I think that's already enough detail.
Okay, and what would have been the same number last?
Well, I think based on disclosures you have in our report, you can try and I need to have it, and I will get back to you afterwards.
Sure. And can you just let me know what would have been the A&P spend, in promotion as a percentage of revenue, current year and last year?
Robin, you have that, no?
Your question?
Advertising and promotion spend as a percentage of revenue in the current quarter and last year same quarter.
Yeah, well, what we can say is that marketing spend went down versus last year in the same quarter. That followed more or less the trend as the volume dropped.
Okay, sure. That's it from my side. Thank you. Thanks a lot.
Thank you. A reminder to all participants, to ask a question, you may press star and 1. The next question is from the line of Prashant Kulkarni from PSET. With the question.
Yeah, hello sir. I had a couple of questions. One was excise bill for the first to be kind of being at 80% versus last year, while the volumes have dropped by 12%, which means kind of an increase of 20%, and there's a state and all of that. Help us maybe like to like what kind of excise increase we are seeing in the business.
Yeah, so it is a bit of a state mix impact because, you know, the excises within the different states didn't really move that much. Of course, in some it did, like for example now Karnataka. Primarily a state mix impact that is happening there. Like for like, I wouldn't want to quote exactly how much it is, but probably a lot lower like for like. And that's due to the state mix.
All right, okay. And you lost market share. Would you give us some idea of the overall market share that the company has now?
So we lost single-digit market share in India. And like I said, Karnataka was one of the ones where we've lost share. And of course, in the route to market states that we mentioned, likes of Tamil Nadu, Delhi, and these states, we lost share. Yeah, I think that is about a good summary of it. I don't know if anything else on that one, Robin. No? I think those are the main impacts, really.
Yeah, exactly. And maybe that excluding the RDM change, it was really only in the low digits that went down. And despite some market share headwinds in a state like Karnataka, we also seem to see some very positive market share developments in other important states for us, like UP and Rajasthan.
Right, so how much is overall market share we have in the market after all these? Obviously, there are shares, but all basis on an India level, what's our market share?
Well, that should be around 50%, excluding the RTM states.
Understand. And a couple of like Haryana and also maybe Karnataka, you mentioned some of the administrative issues kind of impacting performance. And is there some execution issue that we need to kind of spin out in the business? I mean, if you can expand that, what are the concerns so that type of issues don't really impact our business performance?
Ladies and gentlemen, we've lost the line for the management, so request you to stay on hold until we get the management reconnected. Ladies and gentlemen, thank you for being on hold. We have the line for the management reconnected now. Mr. Kothari, you may proceed with your question. Thank you.
Sorry, I'm not sure when you dropped out. The question was that in some of these administrative issues are in our performance. Just expand on what problem and then kind of internal execution that is not, so that these issues don't impact in the future.
So I guess you're referring to some of the dispatch issues that we were having, particularly in April and May in Karnataka, yes?
And also in Haryana, you mentioned some administrative issues.
In Haryana as well, yes. Well, I think we've fixed what needs to be fixed in Karnataka at this point in time. So hopefully that should be positive going forward. And in Haryana, we seem now to be also on the right track there as well. So that should be fine as well. You know, with Haryana, it could be that we still run into some things in terms of some of the approvals that we need. We work through those as we can. But, you know, for me, primarily Karnataka. Can you hear me? Sorry, I was just... Am I still on the call, yes?
Yes, sir,
Yes.
You are audible, yes.
Sorry. Yes, so like I said, the Karnataka brass key that has been, you know, fixed, and the volumes are looking good going forward.
Okay. And just the last question is on the non-alcoholic beverages, where the revenues for this quarter were zero as reported. Just trying to understand. I mean, what's the priority of this business for us, and
Is it this where we are maybe actually getting out of?
Yeah, so the zero business is something, that we actually in the longer term. So we will continue to, work in that segment, but volumes, yes, like you rightly say, are very small at the moment. But we'll continue with Heineken 0.0, and we look at other innovations to go into that category as well.
All right, thank you very much.
Thank you. Ladies and gentlemen, a reminder to all participants to ask a question, you may press star and 1. The next question is from the line of Harit Kapoor from Investment.
Yeah, hi, good afternoon. So I just had two questions. One was on glass. So, there are some, you mentioned that because of demand supply issue, you longer for the glass price benefit to come in. Some of our, contracts, I remember historically used to also be, where we were trying to make them into, formula-based contracts where, de-escalation of cost could also give us benefit. So I was just wondering, wouldn't that some point in a little earlier than expected, as compared to ones where you have to, really go on and negotiate?
So that should be the case on some of the bigger contracts. You're correct. Some of that does come through. Hopefully, that should come through in quarter 4 for our pricing. So if we have what we refer to a PAF, a price adjustment formula, built in some of these contracts, and if there continues to be the softening in some of these production costs, if I can put it that way, such as energy and soda ash, these type of costs, then there should be some softening going forward. Yes. So hopefully that does come through, but I wouldn't like to say that is 100% definite now. It's the balance of the supply and demand as well. But true, some of these price adjustment formulas can be true.
Got it. My second question was on premium and mass. You obviously have been growing, premium portfolio has been growing at a fast clip. Time obviously probably because of one-offs there has been some challenges there, but even to exclude the one-offs, premiums going faster. I just wanted to understand, the price cycle in a lot of states is over. Price increases across the board are done. How are you seeing the premium versus mass or premium versus mid-mass segment growth trends? Is it what you still see premium going at a much faster pace on a normalized basis? I just wanted
Yeah, definitely we still see a lot of opportunity in the strong premium growth. I mean, we still believe that over the coming years the premium segment should be between 18 to 20% of the total beer category over the next 5, 6, 7 years. So for sure we remain fully committed to premium, and actually more so. We are going to definitely ensure that we go and aim to have our fair share in premium going forward. So that ambition has not changed at all.
Got it. And one last question on tax, really. If you look at, you did mention that some of the interstate sale movements that were happening in the past were not profitable, and hence you were kind of relooked at that. My question was, were these products that were moving into largely the mass and mid segment? So I assume that premium would still have been profitable for you to move.
100%. So what we do is we assess it on a mainstream and premium segment basis. So if the interstate for premium is low contribution, we will still do it just from a strategy point of view on premium. But it's more a call on the the lower mainstream brands where if they're in a loss-making situation, we made a call not to do interstate. And at that point in time, then you assess your local capacity levels to say, okay, is it worth for me, to the previous question of doing something around capacity, curb, don't need to do that interstate transportation.
So, and my last question was on the the rollout of premium products. So over the last 18 months, you added Kingfisher Wheat Beer, you added Heineken Silver to the premium portfolio. Just wanted to get a sense of are the rollouts in the markets that you want them to be in now complete? Is there some more scope on the distribution side yet left?
No, so definitely we are looking at some other new launches, and as they come through, definitely you'll be aware of them. Also in other segments, we've also now testing Kingfisher Mango as an innovation, which is doing actually very nicely for us. So with flavor, we have really, I spoke about it actually last time. We have really now starting to form a nice innovation funnel, and we've got a strong cross-functional team working on that. So there's definitely more to come from UBL in terms of innovation.
Great, those are my questions. So if you check the queue, please.
Just a reminder, if there are more questions, you can press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Harit Kapoor from Investec for closing statement.
Thank you, Jake. On behalf of Investec, we would like to thank the management of United Breweries for the opportunity to call and spend time on this one, and also like to thank all the investors and analysts and people who joined the call. I now hand over to Radovan for his closing comments. Over to you.
Yes, thanks. So, it was a difficult Q1 for us, like I said, and particularly April, May. But we remain really positive on this beer category going forward. And there will be a bit of volatility like we've experienced, April, May. But we're here for it in the long term, for this business. So, we still believe in strong category growth going forward, driving also our premium share. That is a priority for us, the Silver, the Kingfisher Ultra brand family, and focusing on our revenue management activities to drive margin, be it in the cost of sales, be it in the top line. And today you saw some examples of it, like on the interstate, and also the pricing that we are getting. So I think, that's how I would like to end. And thank you everyone for your participation.
Thank you. On behalf of Investec Capital Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Please subscribe and press the bell icon to never miss another update.